Hello and good morning. This is Scott Humphrey. I'm the CEO of the World Floor Covering Association. We're excited to have some time to spend with you today to talk about legislation related to the coronavirus, things that you can take advantage of, and things that you need to be doing right now as you look out for the welfare of your business. I want to take a few moments just to thank the leadership of William Byrd for allowing us to set this up. They saw with their foresight the desire to partner with the WFCA and to combine our voices on many of these key issues, installation, and many others that are impacting the industry. And when the coronavirus impact hit us, it made sense that in DC we needed our voices to be louder. And so with the combination and partnership with William Byrd and many others, we have been able to have an impact. I'll be introducing you in just a moment to Jeff King, who is our legal counsel. And Jeff spent many years in DC, and I'll talk more about that during our introduction. Let me just lay out some guidelines for our phone call today. So if you have a question that occurs, Jeff will be going through a presentation, a PowerPoint presentation. He'll cover a lot of information, but if you have a question that occurs during that, something more specific you'd like to ask, just use the Q&A block at the bottom of the screen. Ask that question, and then I will take that question and I will throw it to Jeff to make sure that we get all the questions answered that we can during our time that's allotted today. We assume we'll be 45 minutes to an hour during that time, but if we don't get your question answered, you can find many questions already answered on the www.wfca.org website. We have a section as soon as you log on to our website. It says coronavirus response. If you'll click on that, we have a plethora of information for you related to legislation, insurance regulations, things that you need to be doing to make sure that you're securing everything you can for your business right now. Let me take just a moment and update you on some of the things that WFCA is doing. Many of you may be new to the WFCA as part of our free membership through William Byrd. And so I wanted to let you know that we have been certainly busy updating the industry as a whole, not just our members, but the industry as a whole on everything going on legislatively at a state and a federal level related to the coronavirus. We're even doing the same for our friends to the north in Canada because we have many members up there. You have access to all of this information, and we have access through Jeff and through our lobbying firm, Lobbyit, to many of the key leaders in Washington, D.C. In fact, it's not uncommon for us to get copies of proposed legislation before it is voted on. So we have an idea of how we need to skew that, how we need our voice to be heard so that we're recognized, that we are taken care of in that legislation as well. One other thing I'll mention to you, we realize that many of you are working from home. You're at stay-at-home orders from your state. Most states, I think, still have that going on today. I think there are only 8 that did not do a shelter in place, and some of them are starting to come off of it tomorrow, including our state here in Georgia in some ways. But if you are at home and want to make good use of your time, there is nothing better that you can do than to educate yourself, to prepare yourself to be better at what you do when this is all over. And so we have made our university, the WFCA Online University, free for all of our members, starting immediately and going all the way through the end of June, so the first half of this year. So if you want to take advantage of that, simply go to our website, click on the information there, and you can take advantage of this free online learning possibility. Well, normally right now is when I would introduce you to our CFO, Steve Abernathy, and he goes through a financial analysis and helps you better understand that what we're going through is not uncommon. The way we went into it is very uncommon, but cycles in the financial world are not uncommon, and it gives you some peace of mind that we too will come out of this and that every recovery typically is much longer than the downturn. But Steve's having some issues because of weather, and he does not have internet, and his power is out right now. And so we're going to bypass him and get to the star of the show, Jeff King. Jeff is the legal counsel for the WFCA. He is the lead at J. King and Associates. Jeff has been part of the WFCA organization basically for the last 20 plus years. He practiced law in DC. He now lives in South Florida and spends the majority of his time, I can assure you, because unless he's got another life, he couldn't be spending time on anything else than helping the WFCA, especially over these last 6 to 8 weeks. Just so you know, obviously, Jeff is not licensed to practice in all 50 states, nor north of the border. So we give you the information that we share on these webinars to serve as a catalyst for you to talk to the experts in the given field that you need, whether that be accounting or whether it be legal. We give you a framework and we ask you to meet with your leadership, your experts, to get the information that is specific to your state and your locality. With that said, Jeff, I'll turn it over to you. You can go through the PowerPoint. And again, if you have questions, please use the Q&A section down at the bottom of the screen.
Thank you, Scott. Good morning, everybody. I'm going to give you a brief PowerPoint, go over some of the highlights of what's going on. But mostly what I want to do is be able to answer any questions you have within the scope of my abilities. So, Louis, why don't we start with the PowerPoint? There are loans and grants available. Most of you are pretty much familiar with these. The CARES Act is probably the principal act that deals with this issue. And they have three main provisions in it. There's the Forgivable Small Business Act, Payroll Protection Program loans, which are commonly referred to as the PPP loans. Therefore, small businesses, you either have to qualify by having 500 or less employees, or you otherwise qualify as a small business under their standard small business ramifications. I imagine almost everybody will qualify under the 500 employees because the standards are generally lower for the flooring industry than 500 employees. So it gives you 8 weeks of payroll costs, lets you cover rent, utilities, and interest on business loans and mortgages. It's forgivable if 75% of it is used on payroll, and you paid the same number of employees that you had paid at the beginning of the year or the same period last year. You get to pick which period you want to do. There are new regulations coming out which may add some restrictions based on whether you had sufficient reserves that you didn't need to take this loan, and whether you actually do need it based upon your income versus your prior year's income. Those should be coming out either today or tomorrow, and we're waiting to get them to be able to inform you and our other members of what they mean. There's also the Employment Retention Tax Credit, and that you get that only if you don't take a PPP loan out. So it's an alternative to it. And it's fairly complicated, but in essence, it allows you to take 50% of your payroll costs as a tax credit, not a deduction, but a tax credit based upon various criteria. For some of you who stay open and have managed to stay open, this may be a very good alternative for you to look at, and we recommend you do. And there's obviously also the emergency loans and grants that you generally called emergency injury disaster loans. They're EIDLs, and you've seen them all over. You can get that and a PPP loan, but you have to use it for different purposes. You can't use it for the same purpose you're using the PPP loan. If you apply for one, you're supposed to get a $10,000 grant within 3 days. That has not been our experience so far. And that $10,000 is automatically forgiven if you don't actually get the emergency loan. Next slide. There are other programs too. Please be aware of them. And I've just listed them here. So, there's bridge loans. They're basically, it's an experimental program. They're supposed to get you money very quickly, but they're loans. They're not grants. They're not like the PPP loan that's going to be forgiven. They have good interest rates. They have good amounts of money for you, and they are available fairly quickly. If you're a government contractor, there's also loans sitting there. And if you're a small business that was in the middle of trying to expand, there's access to certain capital loans as well. Also, the Federal Reserve has come up with a loan program called Main Street Loaning. It gives loans up to $1 to $25 million. It's designed to give you to reserve for you to retain 90% of your employees at their current pay. You can actually get both a PPP loan and one of these Main Street loans. They are reduced criteria to get the loan. They're easier to get than normal reserve loans are. They're basically giving banks the option of not even requiring collateral on the loans, and the reserve bank then buys these loans back so that the bank is not at risks. And that's what the program's all about. So those are something else if you're finding yourself, particularly if this pandemic continues on and continues to crush businesses, these may become important loans for you. And there's $600 billion reserved for these types of loans. Next slide. Don't forget about states and local. Many states have loans or grants. Cities have loans and grants. My suggestion, I put and this will be on the website, the whole PowerPoint is, I put the website, and you can hit that website, check in your location. I think you just have to type in your zip code. I may be wrong, I don't recall correctly, but it'll tell you what state and local grants and loans are available for you. Alternatively, contact your governor's office, they'll tell you. And lastly, be aware there's increased access to retirement accounts. Those are your 401ks. They allow you to borrow more than you used to. They give you a longer period of time to pay it back. Basically, you're borrowing from yourself, so you can, the interest you pay is the interest you pay, is paid to yourself, actually back into your program. Next slide. Don't forget this Family First Corona Response Act. That's the act that created the sick and family leave pay. And for most people, it didn't have a big impact because the Department of Labor determined that it was only required to be paid if the employee qualified under one of these factors and you had work for the employee. If you're in shelter-in-place order and you basically shut down, then you didn't have work for the employee. Or if your business was severely limited, you didn't have a place work for the employee and you didn't have to owe this. As these shelter-in-place orders get lifted, you may find yourself needing to bring these people back. And some of them may now qualify for sick leave. And you have to pay it. So if you bring your folks back and there's a doctor's order saying he can't come to work, and that's usually because they're very susceptible, you have to pay 2 weeks at 100%. If they're showing signs of being sick, you have to pay 2 weeks at 100%, but only while they're getting a diagnosis. So they have to immediately go to the doctor, they have to check on this. And if they're obviously determined that they're sick, then they get the loan. They're going to get to 2 weeks. If they're caring for a sick relative or a child because there's no school or daycare, they get 2/3 of their pay up to 20%. And I understand 2/3 of $511 is not $200, but this is government math, so I can't explain the difference. Next slide. And again, the 12 weeks of family leave applies as well, paid leave. If you're caring for a child because of school or the child's daycare is closed, the first 2 weeks are covered by sick pay, and the next 10 weeks by the leave. There are exceptions if you're under 50 employees. It's self-determined. You determine whether you've been so impacted that you don't have the cash flow to pay this without jeopardizing the viability of your company. Just need to document that. But just be careful because the interpretation may change. We've seen changes already in the new regulations. And do not discriminate. Just don't bring back people you know aren't sick or don't have children. You're going to find yourself in a discrimination claim, and that can be more costly than just paying this leave. Next slide. Unemployment benefits, I just want you aware of them. The CARES Act creates 3 programs. Most of them you've heard about. There's the extra 13 weeks on top of the state benefits. States are usually 26 weeks at half pay. The last one that I have listed here gives you the extra $600 on top of what the normal payments are for the entire 26 and 13 weeks. But the middle one, the Pandemic Unemployment Assistance, expands it to cover self-employed, independent contractors, and others that are normally not covered. If you're completely shut down and have no income coming in, if you're a small company or you're actually an installer and have no business, you can apply for this unemployment, okay? These are state-run. Your qualifications are going to determine on them and what you have to do. But I'm going to tell you now, apply. If you don't have any work, if you have no income coming in, apply. or your income has been so severely limited that you're really not making any money, apply. And again, there's a website there to find out what your state requirements are. Louis, next slide. As you know, there's a new package that was passed by the Senate that adds $320 billion to the PPP loans, $20 billion added to the EIDL loans, the emergency loans. It's before the House now. It's likely to get passed this week and signed certainly by this weekend or possibly early next week. It was negotiated with in Congress and with the Department of Treasury, so it's got the president's approval on this to that moment. So that's coming in. Just be aware of that. It's going to add. So if you've not gotten your PPP loan, there's going to be money added to it. And they also are making more restrictions on who can apply and giving more money to local small banks and credit unions. I think there's 60 million designated just for them, along with people like minorities and women who own businesses. Business interruption insurance. Many of you have it and many of you aren't getting it. And you know they're claiming, no, we don't cover pandemics or virus, you have no property damage, whatever the reason. There are states that have introduced bills that say insurance companies, you got to cover it anyway. We put together a grassroots campaign to get that going. We urge all of you to join that campaign. All you got to do is go to WFCA's website, click on the business interruption link. It'll take you right to it. All you got to do is type your name in and your address. It'll automatically generate emails to your state legislators and your governor. And all you got to do is hit send and they're gone automatically for you. There's also federal legislation pending that's been, not sure it's been introduced, but it's certainly being circulated, called the Pandemic Risk and Reinsurance Program. And it actually does the same thing, mandates coverage for this pandemic, but provides funding to the insurance companies to do so. And there's been class actions lawsuits already filed. So get your claims in before it's too late, so that if in fact any of this does take place, any of the legislation take place, or there's a class action settlement, there may be money for you at the end of this rainbow, or at least I shouldn't say rainbow, pretty more the end of this terrible tunnel. Next slide. Remember, you also during this pandemic have business obligations. Don't forget them. You have lines of credit and other loans. You have to notify them of material changes. You have covenants you have to reach, which may not be done. The federal regulations say you can restructure your loan, and the fact that you're late by 30 days does not matter. But it's time to review those loans and make sure you're talking to your bankers to ensure that you're not creating yourself a problem down in the long run. You're going to have contracts that you'll not be able to do. Work with your people. If you can't fulfill them because supply chains are disrupted or because of shelter-in-place orders or other factors, you just need to work with your people. There's generally, if you talk to folks, they generally talk back to you and they recognize your problems as you work them out. Don't forget to renew your insurance. I have a couple of clients that, I forgot to renew my insurance. Well, don't, because you're going to find new restrictions on that insurance. And you may find it harder to get. So just renew it. I know these are tough times, but try to get those done. Next slide. You have obligations to employees as well. If you have provide health care to your employees, and you have 20 or more employees, you have to notify them of an opportunity to continue that coverage. They get it for 18 months, and the employees pay 102% of the premium. They pay all of the premium plus 2% processing fee for you, the administrative fee you incur. You can charge, you don't have to charge, but most do. And generally, your provider will want that money. There are also state COBRA obligations. They usually have fewer employees, as few as 5. And shorter times, usually 6 months, most of them that I've seen. So don't forget, you may have obligations if you're laying people off and you're not providing them continued healthcare coverage if you already provided it. Next slide. There's also obligations in many state laws of any reduced pay or layoffs. You have to give them at least, some of them are a week, some of them are just several days, but you have to tell them that's happening. And don't forget about your exempt employees. Their salaries are not dependent on the hours worked. So if you keep having these people do any work for you, whether it's from home or any other way, you have to pay their full salary or they're not going to be considered salaried employees in the future. And remember, the minimum wage of $319 a week still applies for these exempt employees. Those are usually your managers and such. So if you reduce their pay below that 913, then they're due overtime. It's going to be hard to pull them back into that category once this is over. So just be cognizant of that. Be careful. You're almost better not to have them do any work than have them do a little work at full pay. Next slide. Now, again, we mentioned you're going to start seeing these shelter-in-place orders being lifted, and you're going to start reopening. When that happens and where that happens, I don't know. But you're going to need to take precautions. I've listed a number of them here. These are primarily done off of the CDC's recommendations. Some states, I believe Wisconsin has, I believe Pennsylvania is looking at it, New Jersey may have already done it, have mandated these if you reopen. But they're essentially, you screen employees and if possible, the customers coming into your store, ideally with temperature checks. You send somebody home, don't let them work, and isolate them immediately if they show signs of the virus. Keep everybody 6 feet apart. Make sure everybody has masks and gloves that should be worn every day. Hands should be washed with soap or have hand sanitizers. Disinfect the workspace daily. You should look like implementing engineering controls, installation of physical barriers. If you've gone into the grocery store lately, you'll notice there's a little plexiglass screen between you and the checkout lady or man. And so do that. Look at that. There's ventilation. You can get hyperventilation systems as well if you have it. Stagger shifts, breaks, and lunch breaks to avoid congregation. Those are the basic aspects to it. Next slide. And with that, we can click out of this and see if anybody's got any questions and want to ask anything more.
Told you he was a busy man. He's just proven it by his phone ringing at the very perfect time.
I'm sorry. I should have shut it off. My fault.
Oh, that's great. You couldn't have planned that better. So, guys, I'll remind you again, there's a Q&A section at the bottom of the screen if you have any questions. We realize at this point that much of this information has been out there for a while. We've been communicating since the very first evening when all of this took place and communicating a lot. You've had access to our website, so much of this may be a recap for you. Jeff has also thrown in some new information. We'll have more new information next week. We typically have a weekly webinar for all membership in WFCA. Wanted to do this one specific just for William Byrd, partly as an appreciation for our partnership and then helping to get you signed up with the WFCA. But also we're cognizant to all of the needs of our members and want to make sure that we reach out and meet those needs where we can. Next week's webinar, likely on Thursday. Typically they're at about 2 o'clock, right, Jeff, 2 or 3 o'clock. So just be on the lookout. We'll send out a communication about that, but that webinar will have probably more of an update on the new legislation. Not all finalized yet, voted in by the Senate, but Congress still has to vote on that. So there is still a lot of interpretation to go with that. Let me fill in a couple of things while I'm giving you a chance if you have any questions to ask. One of the last screens that Jeff went over there was on obligations to customers and employees. Sam O'Krent from O'Krent Interiors in San Antonio has given me a form that I will send to Lewis and he can give to Annette, and y'all can distribute it through those who are watching this, that they actually give to customers before they can come in for appointment. I think it would be a very similar form to what you might give to your sales reps that come in to make sure that if they're running a temperature, they don't come in just as a checklist of things they have to go through. Much of it is OSHA regulations, similar to, I'm sure, what Jeff got there. But I will give that again to Lewis, and he can share that with the William Byrd leadership, and you can utilize that in your own localities, whether it be distributor or retailer.
Scott,
go ahead.
One question we have is on face masks, whether people wear the masks. There are also regulations out there that require you to wear certain types of ventilation systems, particularly with silica dust and, formaldehyde. There's asbestos remediation stuff. Those regulations supersede the mask. If they have a more strict requirement to protect the employee, you still apply those. And OSHA has recently issued a directive saying that. So if you have to use a certain type of mask because you're grinding concrete, a certain type of mask because you're remediating asbestos, those still apply. So a simple paper or cloth mask will not be sufficient. Also, it is recommended that the masks and gloves not be reused, that they be thrown away every day, and probably gloves every time you take them off, because as soon as you take them off, you're exposing your hands again to the virus that may be clinging to the gloves.
Cool. Hey, Jeff, was that a question you saw at the bottom of the screen, or is that just one that has come into you?
That's a point that's keeps coming up
Okay.
on other webinars, and I wanted to mention it because we get that question quite often from members.
Okay. No, that's good. I just wasn't seeing any and wondered if there was some kind of glitch where you were going to need to moderate yourself because you were seeing the questions and I wasn't. No problems. So, Jeff, I had a couple of things that occurred as you were going through yours, and some of this new. I heard yesterday that there were some companies and universities that were giving their money back that had applied for PPP loans and realized that they probably did not need them. Are you aware of that? Can you speak to that? And I guess my question is, will that money be reassigned to the PPP process so that it can then be allocated to people that have put in for those loans?
Yeah, it will be. But just to put it in perspective, okay? The total PPP loan is going to be about $700 billion, okay?
After round two as well, right?
Yeah, Harvard is $7 million, right? If Harvard gave $7 million back every day, it would take about 9 years to get up to $700 billion, maybe more than that, maybe 20 some years. That's how little money is coming back in. Now that sounds big because you're going to probably have, and the Harvard money does not go back to PPP loans. That money was on a different program for educational and nonprofits, C3s. So it's a little different program, but you know, people like Shake Shack who got the maximum $10 million. Remember, that's the maximum you can get. You know, those folks, that will go back into the pie. I just don't know, even if you add them up, the largest users were these restaurant chains.
Yeah.
You know, and, you know, so I don't know, I'm picking on McDonald's only because I know the employee numbers. They have 400,000 employees, yet each individual restaurant could get a loan, because none of them had 500 employees.
Yeah.
So I think the largest user was actually IHOP maybe, or something of that nature, but there's a lot of money given out. So if you took every IHOP and gave them this money, and every Applebee's, since they own both of them, and they all got, you know, $1 million, that adds up pretty quickly when you have these hundreds and hundreds of locations. Chili's is the same way, all of these chain restaurants that allow them to use individualized stuff. I think that is why Department of Labor is looking at creating new Department of Treasury with Labor is looking at putting new restrictions on this. Excuse me, I should say Department of Treasury with small businesses looking to put restrictions on this. One is they're going to look at your cash reserves and they're going to compare your income this year to last year, or over the last couple of years, I think. That's a little unfair in some ways because you could have a surge in the end. The moment you're trying to, the idea of the program is to pay employees. That's a principal purpose of a PPP loan, is to keep your employees engaged with you. They could easily pay this directly. They want them to continue their relationship with their employer and have the employer pass this money through to them. Well, that's true. If you have no business now and you have a surge of this in the fall because all of a sudden all that pent-up demand is now being filled and you're just busting away, your income may be the same in that. So I think it's going to get a complicated issue. But there are attempts to at least restrict these big chains from getting all this money.
Yeah, Jeff, one of the things I wanted you to speak to, because I know I saw some communication with you and Max, our liaison with Lobbyit, and me yesterday, where this new legislation, apparently they have specifically set aside a certain portion of the funding for true small business. Is that correct?
They haven't changed that, in all honesty. What they do has set it aside for small banks and lending institutions, the smaller ones. And with the whole goal of is that you don't have to have a relationship with the bank.
Yeah.
You know, there are many businesses, take an installation business is going to a nice little 5 to 10 man shop. They probably don't have much of a line of credit. They may have no lines of credit. their only relation with the bank is their checking account, and while they run money through that bank, they have no true relationship with that bank as a business. And then when they went to go for their PPP loan, they couldn't get it because they don't have the kind of thing. If you wonder why the big banks paid out so much money to these large chains, is because they have such a big relationship with them. And so the idea is to put aside money. So there is money set aside for minorities, set aside for women-owned businesses, and set aside for the smaller banks and credit unions and lending institutions.
Okay. All right, good. So, and for all those that are on the call, just so you'll understand, this is all fluid. Oftentimes, after it's already voted on, they still have not finalized the details of the legislation. That happens on the backside. That's why you'll see updates from DOJ and DOL and the Small Business Administration coming to you on a regular basis. By the way, when we get those, we forward those on, or oftentimes Jeff will dive into them and translate them for our industry, and then we'll post that information for you again on the website, www.wfca.org. Jeff, still waiting, not seeing any questions come in, but I just had one that I thought might be pertinent to everybody that's on the call. What's the number one mistake that you fear retailers are making?
I think not paying attention to their business. If they're shut down, are they making sure they're creating, maintaining their relationships, making sure the bank knows that there's a change in their financial aspects, so the banks can't come back later and hurt them in any way, that their line of credit still remains open, that they're not working with their banks, that they're not doing the checking on their insurance aspects to it, and that they're not marketing. Maybe I'm really concerned with that. Everything seems shut down, but this may be a good time, particularly in a lot of states have allowed construction to be considered an essential business. This may be a great time to redo that restaurant, a great time to redo that hotel or that convention center. There may be real business opportunities here, and you need to check those. I know one of our members has done that. They've sent out letters and emails, and they've actually got like 5 to 10 new matters in a week, new business. So I think that aspect to it is extremely, extremely important. And then obviously making sure you're cognizant of what social requirements are going to be done once you reopen. Some states are mandating them, so you're probably better off just complying with the CDC's requests because I don't believe any state has done a whole lot more than those. Those are probably the key aspects to it that you have. But also don't forget there are other loan opportunities. Call your states. You may have a grant there. It may not be a lot of money. It may be $25,000, but it may just be enough to get that rent paid. Just enough, to keep somebody going for another week or two. So look at those opportunities as well. Don't think PPP loan is the end and wherefore of everything you need in this crisis.
Yeah, Jeff, we've talked about this offline, but the reality is everyone will not survive this situation. But some people will actually thrive through the situation because they'll reinvent themselves. They'll anticipate how the customer is going to be different, and they'll adapt. The truth is you either react or you create. And so if you're reacting, somebody else did the creation, but you have the opportunity to lead right now. And I challenge retailers to do that. Think ahead of how the world will be different when you come out of this.
I also want to urge everybody, keep abreast of everything. The statute and regulations are an aporia, an internal conflict. Good example of that is the CARE Act says that the covered period for the PPP loan is February 15th through June 30th of this year. Well, that sounds like you can get the loan and use it for payroll for any of those periods, you would think. But the other part of the statute, which is the forgiveness part of the statute, says you have the 8 weeks start upon the origination of the loan. So there's an internal conflict there. There's an internal conflict with the definition of whether payroll costs included independent contractor payments. The SBA has said they do not. But if you read the statute, I usually read the word and as meaning also, not or. Yet they read it as an or. So there's a lot of internal conflicts in the law, and so there's things can change daily. we are interpreting this based upon our understanding of the law and the language that we see there, but be cognizant that these regulations can change some of that. So I urge you all just to keep abreast of this. Look at the WFCA website or any other websites you have and any other providers you have for any new information. Send in their questions to WFCA or you other inform people who give you information. That's what I urge you to do, because this changes every day.
Yeah, very true. Very true. Okay, still seeing no questions. So let me just again thank Larry Chandler, who helped us get this set up, and many others on the William Byrd side, Annette, who worked with Lewis in getting this all set up. Thank you. We, again, are available for you. And as Jeff said, I'll just reiterate, whether it be through webinar, through an email, text, however you need to reach out to us, please do so. Jeff is amazing in responding back on these. He's actually become almost a personal lawyer, which is not the intent of this at all. Most of the questions typically are consistent. And that's the reason we have a Q&A section on our website that you can go to, that you'll likely find the answer to your question right there already asked by someone else, because the one thing about the togetherness in this is we're all feeling the same pain and people are having the same concerns. So we challenge you to think ahead, be ready, and know that we're here to support you in any way we can at the WFCA. Thank you guys again. And if there are no further questions, then we are off. Thank you guys very much.
Thank you all. Stay healthy and safe.